There's a European stock that almost nobody talks about. It's been quietly increasing dividends year after year. It's also been buying back its own shares, and it's delivered some amazing growth. Its corporate governance is among the cleanest in this part of Europe, and behind all this is a generic pharmaceutical powerhouse. This company dominates Central and Eastern Europe, and its products have been trusted by tens of millions of people across the region. This is the story of the Slovenian company called Krka. Hi, my name is Niranjan. I've been investing in global equity markets for almost 20 years. My goal is to achieve financial freedom through passive income, and I'm here to take you on that journey with me. Krka's story began in 1954 when it formed its first laboratory. After that, the company expanded and had a full production facility by 1962. In the 70s, it even branched out into health resorts and spas. After the breakup of Yugoslavia and Slovenia attaining independence, Krka decided to expand into international markets. The company also listed on the Ljubljana Stock Exchange in the late 1990s. Today, Krka stands as one of the largest generic pharmaceutical manufacturers in the region. The company has major operations in Poland, Slovenia, and Russia. The company also entered into a joint venture in India with a local partner there. Today, Krka employs over 13,000 people around the world. Krka operates in both the prescription as well as the non-prescription segment. Together, the revenue from these two segments accounts for more than 91% of the total company's revenue. The remaining portion of its revenue comes from its animal health division as well as from its health resort and spas. What's remarkable is over 94% of the company's revenue comes from outside Slovenia. This pushes the company to higher international standards, higher quality requirements, and higher levels of corporate governance. To me, one of the most important things Krka has is its vertical integration. The company controls the entire production chain, right from manufacturing the ingredients to the final product. This gives the company greater quality control, more economies of scale, cost efficiencies, and that means greater profitability. What I also like is the sales of this company are highly diversified. On top of all that, Krka has a strong balance sheet, healthy profit margins, and more importantly, it has a buffer in case the company goes through any economic or financial challenges. In the first 9 months of 2025, Krka recorded a revenue of 1.53 billion euro. This puts it on track for a record year, with revenue exceeding 2024's revenue if it continues at this rate. Krka maintains very healthy profitability, and because of this, it's able to take about 2/3 of its net income and distribute it to its shareholders. If you look at the ownership of Krka, a little over 26% of the ownership is held by the Slovenian government. Foreign investors own about 18% of Krka, while retail Slovenian investors own about 41% of the company. There are also several institutional investors among the top shareholders of the company. I like this diversified mixture of shareholding. When it comes to ownership, I also like the fact that the management of the company is involved there. The CEO of the company, Mr. Colaric, owns about roughly 4.5 million euros worth of shares. This means that his goals are aligned with the company's goals. Since I brought up the CEO, what I also like about him is his modesty. The man has been running this company for several years. He could have had a much bigger stake when it comes to ownership in the company. But instead of that, he's chosen to take a modest salary, a modest ownership, and thereby putting the company's needs ahead of his own. One of the biggest risks Krka is exposed to is its business in Russia and Ukraine. Approximately 20% of Krka's revenue comes from Russia, and out of this 20%, 75% of it is from manufacturing plants based in Russia. If the Russian government does decide to nationalize these plants, it could possess some threat to Krka's revenue being reduced. I'm not too worried because these threats have played out in the past, and I believe the Krka management has made contingency plans, and as a result, these plants, I'm sure, are not going to impact the economies of scale of the rest of the company. When it comes to Ukraine, around 5% of the company's revenue comes from that country. And yes, the revenue there could also be exposed to geopolitical issues that are playing on right now. Now, if one does own shares of Krka, one must understand that these shares trade predominantly on the Ljubljana Stock Exchange. This means one has to deal with lower volumes and a higher bid-to-ask spread. As a long-term investor, I don't see this as much of a risk because one is really buying the share because one is buying the dividend. But if you're a trader, yes, that is something to keep in mind. As with any company in the pharmaceutical industry, Krka is exposed to potential litigation as well as claims on some of the products that it is making. Because Krka has a very strong balance sheet, strong profitability, and cash reserves, I don't see this impacting Krka too much in the medium to long run. Krka is also exposed to currency exchange fluctuations. The company earns money not just in euros, but in dollars, rubles, Polish zloty, and as a result, the exchange rate could also impact its final revenue. When it comes to valuations, Krka isn't outrageously priced right now. At the same time, it's not a cheap stock either. The company is certainly more affordable than most tech stocks. But of course, you're not getting the growth that, for instance, big tech is giving you either. The good news is that periodic speculation about the company's Russian operations brings about attractive entry points into the stock. Just a few weeks ago, for instance, there was a rumor that the Russian authorities could potentially nationalize all European assets that are left in Russia. What happened? In just a few trading sessions, Krka's stock went down by over 20%. That presented a very attractive buying opportunity. What happened after that? Well, nothing. So the stock went back up pretty quickly, and as a result, those who bought at those lower prices ended up making some money. Now, how does one invest in a company like Krka? Krka is trading on the Ljubljana Stock Exchange, and there's a secondary listing on the Warsaw Exchange. Why Warsaw? Well, Poland is one of the largest markets for Krka, and a lot of people in Poland are familiar with the Krka brand. So it makes a lot of sense. You can buy Krka stock on platforms such as Interactive Brokers or on even European platforms like Trade Republic. To conclude, Krka isn't exactly at mouth-watering valuations, but at the same time, I wouldn't say it's in bubble territory. Historically, geopolitical shocks have given investors very attractive points to enter the company. I understand that some investors may have ethical concerns about this company, and I completely get it. I've tried to present this information to you in as objective a manner as possible. But in my view, this is a company that's growing at a steady pace, increasing its revenue and profits, adding to dividends each and every single year, and that makes it a stable long-term play. Thank you for watching, and until next time, I hope your investments stay safe and profitable.